Good evening, welcome. Today is 18th July, the second day of our demo, and today we will be analyzing Sensex. Now your question might be why Nifty and why not Sensex? Now we have a model which we will talk about later, which tells you which day of the week, what underlying should be traded and what strike. That means whether you will be trading Nifty or Sensex, whether you will be trading a straddle or a strangle will be determined mathematically or statistically and not मुझे क्या लगता है. So let us come down to this first. Time frame is 5-minute candles and the two indicators we were using today was QG straddle charts and IVRQ. Now as I told today morning that before that today's opening price was 82,335, the day range was low was somewhere around 81,600, the massive morning sell-off. We closed somewhere at somewhere where we had a low of just difference of 585 points from the opening. Now this was the first tweet I made today morning. You can go down to Twitter and check this, that on the option selling pro today I am concentrating on this strangle, right? So we did not see the automated rolling straddle indicator. I was using the normal straddle indicator, which is QG straddle indicator, because I can plot a strangle out there. So the strangle which I initially plotted was 82,500 and 81,700. Now this strikes did not come, मुझे लगता है, I think so, this is the range and stuff. This was an extremely statistically or quantitatively driven strike which dynamically changes within the day if something untoward happens, and you go to that strike and sell that strangle. So this is the tweet I made at 9:54, sorry. And then what happened was, I gave you the picture also, that we'll track IVRQ to see it signals that IV is going down, we'll then short the strangle. Now what was happening in the morning was, you must have seen this because I was posting these pictures, volatility was continuously going up, IV regime was high, which is red. Now the basic rule is, if IV regime is high, you do not look to sell straddles or strangles, you simply stand aside. So if you stood aside, this strangle of 320 went up to 420 or even higher. So this whole trade which you see on this particular strangle, as an user of IVRQ and straddle charts, as a member of Option Selling Pro, you should have stayed away from the markets and not traded it. Now then the market was going on and on. Somewhere around 10:30 strikes changed. So I tweeted once again, the strikes changed to 82,300 and 81,400. 82,300 call and 81,400 put. Now I was watching this strike as my strangle, but the signal was still not in a sell zone, correct? This one. 82,300 call and 81,400 put. As you can see, this particular vol is continuously going up. Vol regime is high. So basically I am not going to look to sell anything out here. Your question might be why I am not using the straddle trend indicator. Now the straddle trend indicator works superbly on expiry days and maybe one day to expiry, but rest of the days it does not give very clear signals. So rest of the days your chart will consist of two indicators. One is the straddle charts and second is the IVRQ. That will take into account and give you a timing where to buy and where to sell. Now let us directly go to the charts. Now this is your Sensex chart and this is actually the 82,500, 81,700 strangle. If you can see in the morning it was somewhere around 317 and spiked up to 430, 100 rupee move. So this IVRQ till here was not actually giving you any sell. So you did not fall into this trap. Now this is the chart we were tracking. As I said, from 10:30, from around here, the strikes change on the strangle from 82,300 to 81,400. So now I start watching this strangle. Still here there is no sell because IV is in a strong zone. Here IV enters a normal zone, this particular point. Your strangle price is around 323. See this outside, that is black, is basically normal zone on the IV, and IV is sloping down, IV is red. You have a sell signal on the straddle. So you will sell somewhere around here 315. You will have a stop loss out here of 336. So 21 rupee risk if you are selling the strangle. Many of you asked how should I put a stop loss on the strangle? Very simple. If you are using an algo, use a combined stop loss of the premium on the algo. If you are not using an algo, understand this carefully. You are at 315. Let's say your stop loss is at 335. Okay, so it's a 20 rupees stop loss on the strangle. So on each leg, let us say if it is 315, maybe one leg is 150, one leg is 165, correct? So whatever your stop loss on the strangle is, here it is 20 rupees. On individual legs, put a 40 rupees stop loss. Whatever be the stop loss of the strangle, put double that stop loss on your individual legs on the individual strikes. What will happen is, if one of the strikes goes up by 40 rupees, the other one will fall by 20 rupees. Roughly, it might fall by 18, fall by 15, 40 can go to 41, whatever. It depends upon the IV scenario at that point of time. But the advantage is, even with a manual strangle selling or straddle selling, your stop loss will be in the system. So worst case, you will lose 40 point in one strike, you will gain 15 point minimum in another strike, because if one strike goes up and hits your stop loss, that means other strike is falling, right? So that will decay by 15 bucks. So 40 minus 15, you will lose 25 rupees. So you are supposed to lose 20, you lost 25 max. I think that's fair enough, because you don't have the risk of staying in the market. Anyway, so here after we put the stop loss, here it enters the normal regime. Regime has also changed. And from 315, this is till 305, this thing came to 282. So it fell by 55 rupees. And as you can see, let me increase this. This was continuously coming down, correct? So on a Friday, when people believe that straddles or strangles do not fall, you had a sell from somewhere around 315, you got till 277, but let's say around 305, 310, market is about to close on a Friday, you square off the trade. Because another common sense logic is vol was extremely low. If you see the IV out here, it is like 7.75 Sensex. I mean 778 IV we see on expiry days at 3 p.m. Not on a Friday when 2 full days are left to trade, correct? So on basic common sense, if IVs come down to around 7.5, 8, there is no space on the IV to go down. And if you are following theta decay depends upon your IV. If IV is high, you will have fat theta, then you can sell and get some fun, get some money. But if theta is IVs are extremely low, theta is also extremely low. I mean, if this was a normal day, let's say with 15 IV and IV came down to 13, then this particular strike which you sold at 315 would have probably come down to 200 rather than somewhere around 280. Okay, because the place where you sold the IV was like 8.54 and you got till 7.6. So IV benefit was hardly 0.8 points. But if you have a 2-3 point fall in IV during the day, then the decay on the strangle is actually massive. Okay, let us proceed. So that was the trade for the day, a single trade. The question might be how I was picking up those strikes on the strangle. Now this is what we will do in the master class. Not all strikes are equal, not all days are favorable, and not all underlyings behave the same. Because different strike, different day, different underlying, because you have multiple strikes. You have Monday, Tuesday, Wednesday, Thursday, Friday. Underlying you have Sensex and Nifty. This combination actually picks up a single combination which is the best to trade on that particular day. Now what if you had a proprietary edge that told you exactly which strikes to sell on which day for which underlying, all backed by real-time Greek analysis and battle-tested market data. Now this is not मुझे लगता है, मैंने देखा है, मैंने 5 साल का back test किया, ऐसा कुछ नहीं है. It is a mathematical logic which will work today, tomorrow, 1 month later, 3 months later, 1 year later. And this is not a black box code which I will give it to you. This will be a total framework which I will teach. That's why I am not teaching it during the demo, because this knowledge is, if you take it away, it's yours. So within the masterclass, when you get the knowledge, it stays with you for your life. So it isn't theory, it is a high convection model built on deep insights from option Greeks, the kind of edge professionals use. No guesswork, no over trading, just precision engineered strangle selections tailored for each expiry. It's proprietary, it's powerful, it will be available in the master class. After the demo, when you come into the major course, this will be the first thing which I will teach. Now discover the system that makes strangle selling smart, not stressful. Watch out for the logic in the master class. I won't show you the logic, but this is how we will go on deriving this. But okay, let's go here, then I will come to today's analysis again. So it will look something like this. Is the part of the content which we are going to use during the masterclass to select those strikes. It's extreme Greeks, and don't get disheartened by the maths, because end of the day you will get a single page on where this is the day, so this is the underlying, this is the strike you will sell. It will be written in bold letters. At different IV levels, how it will be changed, fine. It will be kind of a 1-2 piece of paper. You can take a printout, just fix it on the wall in front of your trading screen. Any point of time you see it, it will be clear what strikes you should sell. Okay. Now let us come to the final part. So today morning 9:15 to 11:40, green IV line shot up sharply. Signs of rising implied volatility, as we saw. Red triangles on top, which means IV was overbought, caution zone, background deep red, high is volatile node, not ideal for fresh straddle selling. That's why we did not sell any straddle or strangle. So when I say straddle, just interchange with straddle or strangle. Okay. Now strangle premiums did not drop as IV remained elevated and a high regime. So no opportunity for early straddle strangle sellers. Rather, if they sold, they would have got trapped. Afternoon session was from 11:40 to 3:10. IVRQ background turns blank and then green, favorable for option sellers. This is what I am talking about. Sorry, not this one. Morning session, green IV line. This is what I am talking about. If you are already using the demo, this is your morning, 9:15 to 11:40. Green IV line is shooting upward. You are in a high regime, so no selling here. And as you can see, the strangle from here to here actually did not fall. This was the next strangle, but the actual strangle was this, which actually jumped up in a big way. So this is the place you did not sell. Your selling will start from around after 11:45. So that's what I have written out here. Afternoon session 11:40 to 3:10. IVRQ background turns blank and then green. What do I mean by that? After red, it is blank. Now blank means normal IV regime. You can sell. It is not a high IV regime. Green means low IV regime. Your selling should go on, but now you should be starting to look for a small reversal, because these are extreme lows, like these are extreme highs. Okay. Yeah. Yellow triangles, low IV compression. So your strangle or straddle will continue. Premium stabilizes, stays low. Theta decay accelerated. Sell signals by 𝐬𝐭𝐲 straddle tool. Validate range bound behavior. So you saw this sell signals. If you are not getting this on this indicator, click on settings. Just click this, show aggressive sell. By default, this is off like this. Okay. If you want to see the signals, just click this. It's a proprietary signal on straddles where to sell. The way we use this is on expiry days also. If we get a sell signal and the stop loss is very close, then it's a beautiful trade. For example, this is a sell signal. So if I sell out here 338, give a stop of 360, you sell out here at 305, give a stop loss of 315. This sell signal absolute at the top. So if I sell at 292, maybe 300 is your stop loss and it goes down to 275. So these are also scalping signals if you follow them closely. Okay, on expiry days, those are very good. So today's trade interpretation, key morning, key trading opportunities. First one, avoid morning trap. IV spike, premium inflated, risky to sell. So sellers who shorted too early may have faced M2M drawdown despite no large index move. Best entry zone was post 11:40 AM. IVRQ shows green band, yellow triangle, falling IV. Clear sell signals on 𝐬𝐲 straddle. Very tight range, excellent environment for theta based straddle angle seller. Theta decay profile from 11:40 to 3:15, multiple sell signals, premium collapse visible, near zero directional movement on the strangle. Ideal setup for intraday straddle selling. So performance verdict, 9:15 to 11:30, high IV surge regime. Actionable signal is avoid straddle or strangles. So your action is avoiding trading. Result is risk zone, premium side. 11:30 to 1:30, gradual IV drop. You can start your positions, enter your positions. There was no strong trend on the strangle. 2 to 3:30, IV compression, sell straddle range bound, hard ROI from time decay, right? Insight, late day straddle sells beat early entries due to IV control and trend stability. So that 9:15, 9:20 straddle sell, which is very famous, does not actually work in practice every day. So that's kind of a myth. So if you're using a quantitative tool to pick up timings on where to sell, that will be better. So 𝐈RQ tool helped avoid classic trap. The classic trap is morning volatility pump that tempts option sellers. In the morning, the volatility was high. Now, what is a volatility pump? Let's go to this picture. You will understand in a second. This picture. This is a volatility pump. Volatility is going up. Now, let us say you are a trader and you don't know this side. This right side is unknown, right? You don't know this. Now in the morning, in the first 30 minutes, you see this IV is going up. So this is a IV pump. You said, okay boss, IV yesterday was low, today it has gone up. Let me sell some strangles. You sell some strangles here, you get jacked. So this is actually the morning IV pump and trap, right? We did not fall into the trap because we know the IV regime is high and we are not going to trade out here. So this is what we mean by morning IV pump that tempts option sellers. So your final takeaway from today, patience paid off. The real trade started post 11:40 AM guided by regime shift, IV decay, sell triggers. The 𝐈RQ tool successfully protected against the morning volatility trap and delivered a high probability setup in the second half. Now the whole purpose of this option selling pro, if you have read the description on my website, is making small money slowly, consistently and not blow up. So on a Friday, if you are already an option seller, you will understand a lot of people avoid Fridays because those are the most difficult days to sell. But we, in our strategy, we can sell on Fridays and make money. And if you are not following me on Twitter, my Twitter handle is this. I tweet live when this is going on. So whatever I have told you so far, I tweeted this live in the market in the first half from 9:54. That this is the IV regime, this is how I am avoiding trading, this is where I am shifting strikes. So every day whatever I am telling you now, it is not that I am telling you post the market. I told you when the market was going on. Please go through my tweets, and from Monday also, whenever these things happen, I will tweet about this and show you what is going on so that you can follow these trades. Okay, that's all for today. I hope this was a good day. See you again on Monday. Next 5 days of the demo, Monday to Friday, we have 2 expiries in between. Now Monday will be again a different kind of trading. I will show you some more tricks on how to use the system and trade consistently and peacefully in the markets. Thank you for seeing this video. Bye and have a great weekend.